Good evening, students. Welcome to our evening lectures. Today we are going to understand a very important topic, which is the key to planning. And this is the right month, the right period when all big corporates, all big entities, whether profit making, non-profit making, are engaged in this process of budgeting. Now, the topic is named as budgetary control because budgets serve different purpose and objective. First, they serve the main purpose of planning. So as we understand by the term budget, so budgets are nothing but your financial plans when we talk about your financials budgets, and they are done or they are prepared for the purpose of planning as to what would be your activities on different fronts in the upcoming budget period. At the same time, alongside planning, the budget also serves the most important purpose of providing a direction to your execution team. So once plans are prepared, once budgets are put through, they are passed, they serve as a guide to the managers to provide them a vision, a timeline, a goal on which they have to perform. That is, it helps in giving them a direction. And then ultimately, after every budget period, which may be a month or quarter, the same budget also serve as a yardstick of checking to what extent the plans have been successful, to what extent we have been able to meet our budgeted targets, and what are the areas where the organization at different level needs to improve. So the budget also serves as a very important controlling tool. Now, when we talk about our topic of budgetary control in our syllabus, in this syllabus, we are going to focus on the budgets more from the planning perspective. That is, here we will be understanding budgets or we will be preparing budgets to prepare or to find out our plans. For the purpose of controlling, we have another topic called as standard costing. So in our syllabus of this chapter, we will be understanding how budgets are prepared. So that you need to keep in mind, we will not be using this chapter over here as a tool for understanding the controlling function. That you do in another topic called as your standard costing. So with this basic introduction of the topic, let us start our today's deliberation. I welcome everyone. Good evening all. Very good evening, Maithili, and all present over here. Now, I will need your involvement because when we will be now dealing with this topic of budget, there are some important aspects in this topic that you need to understand. And in order that you are able to yourself prepare the budget and you are able to understand the budget applications, there are some important aspects which you need to focus on. So for that, I need your involvement. I need your active participation because I will be putting through some questions. And once you all are able to answer those questions, you yourself will have a better understanding, a better idea of this particular topic which we are going to deal with. So I request all to be present and ready for my questions to which I expect your answers. Now, in this topic of budgetary control, as I said, we will be looking at budgets more from the planning function and less from the control function. Correct? So keep this in mind. Our topic of budget is more on the planning side. So we will be studying more how to prepare the budget. Now, in this comes the important concept of types of budgets. Now, what is this types of budgets? So broadly, budgets can be divided into different types or categories. The first type or the first category being functional budgets versus master's budget. Second category being fixed budget versus flexible budget. So let us understand these categories so that we set a tone for understanding the preparation of the budgets. Fine, students? Okay. So first we are dealing with what are the different types and categories of budget. And as I said, in this, the first category is functional budgets versus master's budget. Now, what is a functional budget? Now, when we are preparing budget, keep in mind that here we are not limiting ourselves only to financial figures because a comprehensive budget is the one which will encompass all the domains of business, firstly, and it will address all the aspects of business, be it financial, that is monetary, or be it quantitative. Now, when I'm talking about functional budget, we are understanding this budgeting chapter more from the perspective of a manufacturing concern. So, the different functions that will happen in a manufacturing concern are first purchases, where you purchase raw material, etc. Then production, where this raw material is converted into your finished products. Then sales, where these finished goods are sold. And alongside this, you have so many other functions that you as an entity have to perform. Now, these independent functions require a budget so that that budget can be aligned to the company's goals, company's policies, and then that budget, once it is passed, can serve as a guide, serve as a direction tool for all the respective managers. Now, as compared to functional budgets, what is a master's budget? So functional budget will cover each independent area of business, which we call as functions. So purchase, production, sales, etc. Now, what is a master's budget? Master's budget is that budget which contains the summary of many of these functions at one place. So, for example, you will have one of the budgets, which is your cash budget. Now, what will cash budget cover? It will cover aspects from all these. So you'll have, in functions, you have your labor function also. In functions, you have your overheads expense also. So a cash budget will address all these things at one place. So it becomes your first master's budget. Similarly, you have your budgeted profit and loss also. So that you come to know that on the basis of the functions which you are planning, what would be the expected net profit or loss during that period. Now, again, profit and loss will again be a summary of or the net effect of many of these functional budgets. So, what are master's budgets? Master's budgets are those budgets which encompass the effects of different functionals budget at one place. So, this is the first differentiation. Second differentiation is fixed budget versus flexible budgets. Now, what is a fixed budget and what is a flexible budget? Now, whenever we'll be preparing budgets for these functions, we have to decide one fixed quantity of work or one fixed quantity of our performance. Example. Now we'll say, sir, what is this fixed quantity of performance? So for example, I will say that in the coming year, my production will be 10 lakh units. Now around this 10 lakh units, I will be preparing my entire budget for the year. Now, when I prepare budget for a single level of activity, like in this example, 10,000 or 10 lakh units of production, it is called as a fixed budget. But in today's highly uncertain business scenario or economic uncertainty, it is very important for a business entity, besides preparing the budget for one fixed level of activity, it also needs to know what if. What is this what if? What if my production is not 10 lakhs, it is only 9 lakhs? What if my production is 12 lakhs because I get some very favorable conditions? What if my production is very low, as low as 750, something which is happening right now because of this unexpected war situation? So these are the answers which every entity wishes to know at the budgeting level itself. So when you prepare budgets for different levels of activities, that budget is flexible budget. So this is the different categorizations of budgets, and we are going to cover all of these in our syllabus. So firstly, students, is everything up to this point understood and clear to all? Yes. Yes, Mehak, good evening. Good evening, Vibhor. Yes, good evening, Gayatri. Okay, so is everything clear up to this point? Great. Now, we'll be first starting with this functional budgets and master's budget, and that too with this category. That is, we will have one level of production, or not only production, one level of activity. And for that one level of activity, we'll be preparing all the functional budget and the master's budget. And then as a next step, we will also understand flexible budgets. Now, my first question to you all is, are all these functions interlinked and interdependent? You can say Y for yes, N for no. So we are starting with functional and master's budget for a fixed level of activity. This is where we are now starting with. So my first question to you all is, are all these functions of your business interlinked, interdependent? Yes or no? Pooja says no. Kushi, Gayatri, Vibhor says yes. Others? Nikun says yes. Abbar Thakur says yes. Okay. So the answer is yes. And that is logical because you cannot have purchase which is independent of sales. You cannot have production which is independent of sales. You cannot have labor and other expenses independent of production. So how much you are going to produce, that will decide how much you have to purchase, how much labor cost will be incurred, how much overheads will be incurred. Similarly, how much is your sales is directly linked with how much you are going to produce, or vice versa. How much you produce has a direct impact on how much you can sell. So these are all interlinked. Now comes the most important question. If these are interlinked, then I cannot prepare these budgets independently. They have to be prepared one after the other, which means I will first budget one of these activities or factors. Like I'll first budget, for example, purchase, and on the basis of purchase, I'll budget production and sales and so on. So once we have concluded that these functions are interlinked, they are interdependent, then comes the most crucial point of discussion, that we will now need to start preparing the budget in a particular sequence. Because since they are interlinked, interdependent, you have to follow a sequence. Now, in sequence comes the first important point, which will be your first budget out of all these functions. Whether purchase, whether production, whether sales, whether labor, whether overheads, or what. So out of these, since they are interlinked, you have to start or follow a sequence. And in that, the most important is the first budget. Which of these functional budgets would be your starting point? So which budget I should prepare first? This is the simple question. Okay, got two answers. I expect more. Okay, others. Okay, so I'm having different answers. Gayatri says sales, Pooja and Vibhor says purchase, Nikun says production, Kushi says sales budget taking sales of past years or production budget, how much we want to produce. But then out of both, which one? Kushi, because both will have different figures. Ambira Beda, you have said fixed budget. This will not serve the purpose of my question. I want to know out of these different budgets, which will be my first budget. I should first prepare out of these functions, which functional budget. Okay, Avijit and Kushi says sales. Okay, the answer is any of these can be your starting point, whichever is your key budget factor. I will say, sir, what is this key budget factor? Key budget factor is your what is this most limited factor? I'm sure you all will understand and appreciate that all these activities, be it production, be it sales, be it purchase, has some limitation, or in other words, has a maximum limit. So, how much you can produce? There is a production capacity with which you are functioning. So, there is a limit on production. Similarly, there is a limit on sales depending upon how much big is your market, how many competitors are there, etc. Similarly, there could be a limit on how much you can purchase because on the purchase side also there could be some limitations, restrictions. Now, out of all these factors, which is the most smallest is your most limited factor? Example, as I gave, I can produce 10 lakh units. This is my production capacity. But in the present market conditions, the demand is only of 8 lakhs. My demand is of 8 lakhs, that is, I can sell 8 lakhs. Even though I can produce 10 lakhs, I cannot start my budgeting with production. I will have to start with sales. Why? Because if I prepare budget with 10 lakhs, which is my production capacity, obviously my sales would be higher because those 10 lakhs I will be having a plan of selling, but which will never materialize because that is not possible in the expected market scenario or conditions. In such cases, your entire budget will fail. Okay. So whenever you are preparing budget, you have to identify which is the most limited factor out of all these. Limited means which is the least. So as I said, my production capacity is 10 lakhs. However, the sales demand is, let us say, of 8 lakhs. And let us say further adding to this, however, the raw material which I can purchase maximum that can only help me produce 7,50,000. It means the raw material purchase is even lower. In that case, my first budget will be the purchase budget. So answer is any of these functions can be your starting point, but your starting point will be that which is the most limited, which is the most least out of all these factors. And this is also a theory point. So keep in mind, keep these words in mind, key budget factor. So that particular function, that particular activity, which is the least out of all, is your most limited factor. And it is also obviously your key budget factor. Key means the most important budget factor because with that factor, the budgeting starts. So practically it can be any of these functions, right? However, for the purpose of this chapter, budgetary control, we are taking a standard assumption that out of all these, sales is the most limited factor. Means you have production capacity, you have purchase potential, which is higher than your sales. Out of all, sales is the most limiting factor. This is the presumption with which you will get sums in this chapter. So your starting point in this chapter is always going to be the sales budget. Is this clear to all? Now, interestingly, when you go to another chapter, which is marginal costing, in marginal costing, the assumption changes. In marginal costing, maybe your material availability, maybe your labor availability, maybe your production capacity in terms of machine hours availability is lower than your sales. So in marginal costing, the key factor, the limited factor is not sales. It is one of the other functions, which could be production. Yes, production capacity in terms of machine hours or labor availability or material purchase availability. So interestingly, every chapter has its own assumption. So for the purpose of budgeting chapter, your assumption in the sums is sales. But keep in mind, this is an assumption for this chapter. Similarly, for other chapter of marginal costing, you have a different assumption. Now, since sales is your starting point, so the first budget that is to be prepared is sales budget. But generally, this is given in the question. So you don't have to prepare the sales budget. Generally, the sales budget is given in the question. Your answer will start with the production budget. So the first budget that you will be preparing is production. On the basis of production comes the requirement for inputs. So on the basis of this, you will prepare the material requirement budget. On the basis of material requirement, you will prepare the material purchase budget. Further, on the basis of production, you will prepare the labor requirement, or also called as labor cost, or also called as wages budget. And on the basis of production, you will also prepare your overheads cost budget. Correct? Now, on the basis of all these budgets, all these functional budgets, you will prepare production cost budget. You can say it is also like a master's budget. On the basis of all this, you will prepare cash budget. And on the basis of all this, you will prepare budgeted profit and loss. So these are all the master's budget which you prepare. Now, as I said, sequence wise, this is given. You start with production budget. On the basis of production budget, you identify material requirement, labor requirement, and the other expenses. On the basis of material requirement, you also prepare material purchase. Is this clear? So the sequence will be first is production budget, then materials budget. In materials, two parts, material requirement, material purchase. Again, on the basis of production, labor requirement or labor cost budget. And on the basis of production, material overheads cost budget. Now, generally in the exams, this is never asked. This is very rarely asked. The most commonly asked is this and this. You can say in your budgeting sum, except for the next part which we are going to study in the next class, that is flexible budget. If the question is not on flexible budget, it is on fixed budget where you have to prepare the functional budgets and the master's budget. Mainly the budgets which are asked in the question is production and material. In material, both. Labor is rarely asked. Overheads is never asked. Because in overheads, you have to simply make a list of all the overhead expenses. So that is why they are not asking it. Then another commonly asked budget is production cost budget. So if they have to ask you masters, now it is not that in every question they will ask you masters budget. They generally ask functional budgets, which is production budget and then materials budget and sometimes labor cost budget. If they have to ask you masters budget, then they will generally ask you production cost budget. Then you have a whole different set of sums, which is only for cash budget. So the sums on cash budget come separate. That is, it will not come with other budgets. So generally the sums are like this. So one type of sums is production budget, materials budget, and production cost budget. So these budgets come together in one sum. All may be asked or one or two may be asked. Then this is altogether a different type of question. So we call those questions as cash budget sums. Now, interestingly, in this topic of cost and management accounting, the cash budget is asked, but it is generally more commonly asked in another subject, which is financial management. As you can understand, the name of the subject is financial management. So cash budget is a very integral component of your financial management. So the same cash budget which you are going to study here is also part of another subject, that is financial management. And this cash budget is more detailed over there. So what adjustments you get over here in your CMA paper is much less as compared to what adjustments you get in your FM paper for the same budget. And then besides these two types of budget, so what is the first type of budget? Production budget, material budget, production cost budget. These are one set of questions. The second set of question is preparing cash budget. And the third set of question is preparing flexible budgets, where one level budget is given, other levels you are asked to prepare. So they will give you a budget, the fixed budget is given, and they will say now from this, you also need to prepare a budget for 9 lakh, 12 lakh, 750, any other level. So that is a flexible budget question. So this is the third type of question in this chapter. So there are three different types of questions that you need to address. First is functional and masters. Second is only masters, which is cash. And third is the flexible budget. Fine, students. I hope this background is clear to everyone. Yes. Now, can I start with the budgeting part? Should we go to study the respective budgets? Just a minute, students. Okay. Now, so once you have understood this, the concepts, the types of budgets, and the types of sums. Now, we are starting with the first category of budgets. That is, we will understand how to prepare production budget, materials budget, labor's budget, and then later on production cost budget. This will be our first category of question, right? Yes, Nupur beta, please tell me. Nupur, you wrote, excuse me. So tell me, what is your question? What is your doubt? You can unmute and say. Okay, beta, but the WhatsApp link I do not have. You have to put this message to the technical team. And as far as I know, there is no WhatsApp group. There is a Telegram group. So the link will be shared, right? So you just put a message to the technical team. Fine. Okay. So students, let us start. We start with the functional budgets. Now, even though sales budget are not required to be prepared, but you need to know what are the sales, how the sales budget look like, because it may happen that in some other question, like as I said in marginal costing, where something else is a limiting factor, on that case, you need to prepare a sales budget also. Now, whatever budget you prepare, whether it is sales budget, whether it is production budget, a common problem or a common doubt or a common confusion which the students have is, sir, what should be my columns in the table? Because in budgets, we are going to prepare tables. Now, why this confusion comes? Because as we go to different budgets, the table obviously will change. So students find it confusing to keep in mind, because in sales, you prepared a different table. In production, there is another table. Maybe in material and labor, there are different tables. So students get confused as to, sir, what is the proper format and which format has to be used when. Now, obviously, many times the answer to this is, ki beta, you have to learn the format. But I will put it differently. Besides learning, if you can add the logic to it, then maybe your learning effort, your learning load will reduce. Now, what is the logic? The logic is the table that we are going to prepare for each budget. Obviously, you have to prepare a separate table, a separate budget. What will be the columns? The answer is, besides the particulars column. So the first column obviously is your particulars. Besides the particulars column, the other columns will be the columns are for the period for which the budget is required. I repeat, besides particulars, the other columns that you need to prepare is the columns for the period for which the budget is to be prepared. Now, what is this period for which the budget is to be prepared? So, if they are asking you to give quarter-wise budget, so you are preparing budget for the upcoming financial year 26-27, and they want this budget to be prepared quarterly. So if they are asking you to prepare this budget quarterly, then what will be your columns? The columns are the period for which the budget is prepared. And what are the periods? The periods are quarter 1, quarter 2, quarter 3, quarter 4. So the format will be this. Why? Because the budgets are required quarter-wise. Similarly, in some other question, they want the budget month-wise. So they have asked you to prepare the budget month-wise. And what are the months for which they want to prepare the budget? Let us say from Jan to June. So what will be your columns? Your columns will be Jan, Feb, March, April, May, and June. So first rule, first logical point that you keep in mind, students, while preparing the format is, what would be my columns? My columns would be the period for which the budget is asked for. So budget is asked for quarterly, columns would be quarters. Budget is asked for monthly, columns would be the months, and whatever months they will ask. Then generally never ask 12 months. They will ask 3, 4, or maximum 6 months in a question. Fine. At times it may happen that they want annual budget. That is, there will be a single column. So they do not want quarter wise, they do not want month wise, they simply want annual budget. So in that case, after particulars, there will be a single column. Now, you will say, sir, it is so easy. So where is there the confusion is? The confusion is in the next part. Now, this much part is standardized. So either the table is particulars quarter 1, 2, 3, 4, or table is particulars and the name of the months. This part is fixed, no doubt. But where the confusion comes is in the sub column. So this is the main column, 1, 2, 3, 4. But there could be sub columns X, Y, X, Y, X, Y, X, Y. So every quarter may have two sub columns X and Y. Now here the confusion comes in these sub columns, because this sub columns will change with budgets. So in the same question where three different budgets are asked, maybe these sub columns would be different. Now you will say, sir, then what is the logic of these sub columns if they are going to change? How we can remember, or how we will know which sub column has to prepared in which budget? Answer is, for deciding which sub columns have to be prepared, you have to see the nature of budget. Now, what do you mean by nature of budget? If the budget is sales budget, if the budget is production budget, in these two budgets, what is the nature of the budget? The budget is dealing with your products, because sales is also of products, production is also of products. So the sub columns will be of your products. So I have two products X and Y. So I'm preparing two sub columns X and Y. So what is the answer for sub columns, or what is the logic? You will prepare sub columns according to the nature of the budget. So if the budget is of sales or of production, you know that the sub columns will be the product names, because the nature is sales and production, both deals with products. So sub column is of products. Second example, let us say in the same sum, you are also preparing budgets for materials. As I said, for materials, you have two budgets. One is the material consumption budget and the material purchase budget. Now here, both these budgets are dealing with what? What is the nature? They are dealing with your raw materials. So columns are fixed, columns are quarters. What would be the sub column? The sub column will be your material. Now, you are manufacturing two products, but for both products, you require single raw material. Let us say the raw material name is M. Now, if you have a single raw material, you will have a single column, column M. That's it. I hope this is clear. So, sub columns will change in every budget, but it is easy to understand and know what sub columns have to be prepared. That depends upon the nature of the budget. So if budget is of sales and production, the sub columns are of your products. If you have two products, two sub column. If you have one product, one sub column. If the budget is of material purchase, material consumption, the nature is that the budget is of raw materials. So sub column will be of the raw material. It may be one, it may be two, it may be three, depending upon the type of the question. I hope this is understood. Columns, sub-columns, correct? Yes, students, is this clear? Good. 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 Fine. So since you have understood up to this point,
Now let me start with the actual budget format. Now I will be explaining you the format for production budget and both the material budgets so that we can start solving the sum. And while solving the sum, the other formats like production cost, budget, labor cost will be easy because now once you know this formatting, only it will be changing the column or the rather not even column, the sub columns. Now I'll continue with the same example that you have two products and one single raw material required for both the products. With this as the background, let me explain you the format. Now we come to the format. So you are first preparing, as I said, sales budget is given. You are first preparing the production budget. So you will say production budget for the year. Now let us say it is 26-27. Right? Or if they are asking you for 6 months, then you'll say production budget for 6 months period. So heading is simple. Now comes the format. So format is particulars. Now columns are, so again, I'm assuming they are asking you budget quarter wise. So columns is your quarters. Now what are your sub columns? Sub columns are your products. Now, as I said, we are assuming that is, I'm taking example, there are two products. So sub columns is within each quarter, XY, XY, XY. Now, what is the format? Now, remember one thing, this production budget is only a quantitative budget. That is, you will be preparing or writing down only quantities. There is no value here. There is no amount here. So production budget is only a quantitative budget because production is generally measured or expressed in terms of quantity. So that is a production budget is only in quantity. Now, what is the format? Now, before I give you the format, let me give you the logic of the format. Again, when you know the logic, remembering the format content is easy. The logic is your trading account. Now, just try to figure out trading account, but in quantity. So if I have to prepare my trading account in quantity, what all things would be there? I'll have opening stock of finished goods in quantity. Then, since I'm a manufacturer, I will have production in quantity. I will have sales in quantity. And I'll have my closing stock of finished goods, which is again in quantity. And with these four figures, the account will tally. Firstly, is this understood? That if I'm preparing my trading account with quantitative figures, I will have only four figures in my trading account, and all the four figures are quantity figures, and my trading account will tally. Is this understood? Correct? So it will tally with quantities. So you have some opening stock. Whatever production you have done during that period is added. Whatever goods are sold, that is subtracted. So by default, balance is your closing stock. Nothing beyond these four things. Correct? Now, if you have understood this, finding out production is simple. Now, what I have shown you in the trading account format is what I'm putting here in the table format. So I have to find out this, my production quantity. From where I'm starting with my budgeted sales, which is expressed in quantity. So you have XXYY, XXYY, XXYY. These are the quantities of respective product for each quarter. So this is there. Now to this, what I will add this figure. To do this, I will add desired closing stock, obviously of finished goods, not of raw material. In question, you will be given raw material also because we have to prepare the material related budget also. So this quantity is of closing stock. You can simply call it as closing stock, but generally it should be called as desired. Desired is this is what you are expecting, that you will maintain this much closing stock at the end. Now, both these are credit figures, so both these are added. Now, this is a debit figure, so this has to be subtracted. So you will subtract from this opening stock of finished goods. Now, this is subtraction, so better is you write in bracket so that while computing, you will not make a mistake. Otherwise, practically what happens, students, many times in exam flow, under the haste of completing fast, we add all the three figures. So better is you should write the figure as bracket. Now, sales plus closing minus opening. What will you get? You will get your budgeted production, which is in quantity X, X, Y, Y. X, X, Y, Y, X, X, Y, Y. Understood, students? Simple, the production budget. Understand the logic? The format is simple. So, Pawan Beta, as I said, sales would be given. So, your starting point will be obviously sales quantity. And in sales quantity, when you add closing and subtract opening, what you will reach is your production quantity. Correct? Students, understood by all? Clear to all? With the logic, the format. So once you understand this logic of trading account, I'm sure you will not be required to learn this format. You can understand this with logic also. And once logic is clear, you need not learn a lot of things. Many things are simple then. Now, once you have determined your production quantity, so once this production quantity is determined, right? Now, as I said here, you can see on the basis of your production quantity, you will determine your material requirement, labor requirement, other expenses requirement. Now, majorly in the question, raw material budget is asked after production budget. So I'll be explaining the raw material budget format. So on the basis of production quantity, that is on the basis of this quantity, which you have just computed, now you will prepare the material budget. Now in material, you have two parts. So you have raw material requirement. People also call it as consumption. And you also have the raw material purchase budget. So your next budget is raw material requirement or purchase budget. And again, this will be continued here for the year, whatever. Again, the columns are periods for which budget is asked. Correct. Now comes the sub columns. Now here the sub columns was XY, 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 XY. But here my sub column is M. What is M? M is the name of the raw material. And as I said, I'm assuming there is a single raw material. If there are two raw materials, you'll have two sub columns MN, 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 MN. Correct? Now, we have to find out raw material requirement. So I will say raw material required for. Now, for what you require the raw material? You require raw material for producing your products. So I require raw material for product X, product Y. Now, in order to determine your raw material requirement, what you need is the input-output ratio. Now, see here, you have your quantities. Quantities of what? Quantities of product. So X is the quantity of product, Y is the quantity of product. And from where you have got this? You have got this from here, from your production budget. Now, to this quantity of product, you will multiply Now this is multiplication sign. Huh? Multiply what? Now in the question they would be given that 2 kgs of raw material is required for 1 unit of X and 3 kgs of raw material is required for 1 unit of Y. Now please understand this is the very simple maths that this is your quantity of product. So which you got from your production budget here. In every quarter, how many units of X you will produce and how many units of Y you will produce. To that you multiply that for each quantity of X, you require 2 kgs of raw material. Now, when you multiply this, I'm sure you will understand this. What you get is how much raw material M I will need to produce X. And when you multiply this, again, what you get is raw material M, how much quantity of M you will need to produce Y. So this you will do in every quarter. So this same thing will be repeated in every quarter, taking the respective quarter's production quantity from here. So this budget will give you the production quantity, taking the production quantity, multiplying it by 2 and 3, production quantity, multiplying it by 2 and 3, you will get the raw material quantity. Now I will get my total raw material consumption, which will now be in kgs. So this is M required for X. This is M required for Y. Adding up both this will be my total raw material M required in this quarter. Similarly, adding up here, this is raw material M required in this quarter. This is raw material M required in this quarter. So here, whatever figure or quantities you will be getting, that is the quantity of raw material. Students, I hope you are getting this. This is a very simple maths. Nothing very technical, nothing very special in this. It is simple maths. Good. Yes, students, let me know. Are you understanding this or not? Good. Good. Others? Good. Yes, yes, we'll come to that, Khushi. Good point. We'll come to that. So what you have got is, you have got the first part of the budget, which is the raw material requirement or raw material consumption budget. Now, we will prepare the second part of material budget, which is the purchase budget. Now, again, for understanding purchase, let me take you to another format. Okay, I'll prepare here raw material account. Now, if you see a raw material account, again, in terms of quantity, which is here kgs, correct? What will be there in your raw material account? You will have opening stock of raw material. Now I'm writing M because your raw material is M. In that, you will have purchase quantity added. What will be credit is the consumption quantity that will be credited because that will go out of your raw material account or raw material stock. And what is left is your closing raw material quantity. Again, I'm sure you will agree to this, that these four figures will match this account. So I have opening stock of raw material, I have purchases of raw material on the debit side, credit side, I have consumption, I have closing. These four figures makes the account tally, right? Now again, what I have to find out? I have to find out this. Simple. You have this consumption quantity, so you have this quantity. What you do to this? You add desired closing stock. Now of what? Of raw material. Let me call it as M. Subtract from this what? Opening stock. Again of what? Of raw material. Correct? Now, this plus this minus this. What you get is this. So what I'm now I'm left with is raw material purchase, and it is in quantity. So M. So from the same budget, students, you get both things. First, you get consumption. How? By multiplying the production quantity by the raw material requirement. If there are two products, then adding both the products, that will be your total raw material requirement. In that, adding closing stock, which you are expecting to maintain at the end of your budget period, so desired, subtracting the opening stock, which is at the start of the budget period. What is left is the raw material purchase quantity. Done, students? Clear? Now to this multiply. What do you multiply to this? You multiply your purchase price, which is obviously in rupees. So let us say your purchase price is rupees 12 per kg. So you multiply. You multiply all these quantities by 12. Now this was purchase quantity multiplied by purchase price. What you will get is total raw material purchase cost. Raw material purchase cost. Right? Gayatri, but generally trading P&L accounts are prepared annually because trading P&L accounts are part of master's budget, as I explained here. And master's budget generally are prepared for the whole year. Correct? But if let us say anybody wants quarterly trading P&L, since we are preparing all budgets quarterly, even trading P&L can be prepared quarterly. Right? So practically you can prepare. Firstly, in your exams, as I had already mentioned, budgeted P&L is not asked. So that budget is never asked. But even if, let us say, rarest of rare case it is asked, they will ask it annually. So students, this is your format. I hope it is understood, clear to everyone. Any questions with this, students? Any doubts? Because now we are going to start with practical sums on this. Now see, the calculations are very simple. There is no rocket science in this. There is no very difficult maths in this. Rather, it is the most simplest maths of plus minus. But what is very important in the question is selecting the right figure. Now you'll have multiple figures. You have the sales figure, you have the opening closing stock of finished goods, opening closing stock of raw material. You have to take the right figures. Plus you have two products, one material, one product, two materials, two products, two materials, different combinations. So the data would be multifold. The only skill that you require in this chapter is taking the proper figures. So you can just take a screenshot of this for your reference so that when I'm solving, I need not come back to this particular format part again. So just take a screenshot and then we go to the questions. ठीक है? ठीक है. Now I've taken a question where there are two products and two materials. But what I have kept easy is you have to prepare the budget only for a single month. Correct? Now you have a lot of data. This is where your skill is to take the appropriate data. So what figures are there? Budgeted sales quantity of both the products. Then how much material is required per unit of product. So this will help you in finding out the raw material consumption. And then the stocks, opening, closing. Now, interestingly, there is a flavor added to the question by not giving you closing stock. Why? Because they have given the closing stock not as a figure, but as some working. So that we will come to, because anyways, this is of material that will require very late. So your first step is you have to first prepare the production budget. On the basis of production budget, we will prepare the material usage, that is the material consumption. And then on that basis, we'll prepare the material purchase budget. So first step is preparing production budget, right? Again, you may just take a screenshot of this so that when I am solving, you will have your question in front of you for doing your own solving. Right, students? Now, here it is for a month, but the name of the month is not given. Particulars. Now see, what is the column? Column is the month. What month? I don't know. So the name of the column is not known. So this is, you can say, the format. Now, I don't know the name of the month. So it is better not to write this word month. Had I known the name, at least I would have written the name, maybe January, March, whatever. But I don't know the name. So better is not to write. But just for your understanding, you have only one column because there is only 1 month required in the question. Now, what would be my sub columns? The sub columns is the names. Now, in my production budget, I'll put the names of the product. And in my material budget, I'll put the names of the materials. So here I'll say product A, product B. Here I'll say material P, material Q. Now you may not use the word product. You can simply write A and B, but I'm purposefully writing product A, product B, material P, material Q, so that you'll understand. Because if I simply write A, B, P, Q, since this is the very first sum, you may slightly find it difficult to understand what it is. Now, budgeted sales quantity, correct? Plus desired closing stock minus opening stock. This will be your production quantity, correct? Now, raw material required for product A, product B. This will be your total raw material usage. Now they have used the word usage, so I'm using the word usage. Budget. To this, you will add desired closing stock. You will subtract opening stock. You get raw material purchase quantity. Okay? Chalo, I give you all 2 minutes. You have to simply select the figure and put it there. That's it. I'll just be back in 2 minutes. You solve till then. Students, you may post your answers. Okay, Pawan has given me one answer. Good. $15, $17, $500. Closing 1750, 337. $750, $875. Okay, 16, 2,500, so 20. So production is in units. So my production budget for A is 16,000 and for B is 20,000. Correct? Now I'll write these production quantities here. So A is 16,000. B is 20,000. Now I'll take the figures. Now for A, I require material P 2 kgs and material Q 3.125. 2, 3.125. See, you have to put the right figures. This is the most important point, students, because where you are writing which figure is the key, right? 4, 1, 4, 1. Correct? Now this is 32,000 kgs. This is 80,000. Correct? This is 20,000. And this will be 16 threes are 48. And then 2,000, 50,000. Correct? Now this will be 112,000 kgs. Correct? And this will be 70,000 kgs. Right, students? Do you all have this? Okay, very good. Acha, Pooja has got even the purchase quantity. Nikunj has also got purchase. Okay. Very good. Pawan also has got purchase. Wow, many people, many of you have got purchase. That's good. Very good. So, now opening stock is given ready-made. There is no problem. 12 and 9. So 12 and 9. This is given ready-made. Now for closing stock, there is a language adjustment. Now what is this? The company wishes to operate a JIT material inventory system. So this is fine. It is a sentence. JIT is a type of inventory system which you study in material chapter. Now, as an initial procedure, it wishes to maintain minimum stock of materials equivalent to 2 days consumption. Now, this is the key point. So how much stock they want to maintain? They want to maintain a stock which is equal to 2 days consumption. Now, there are 28 working days in a month. This is given. Now you have to simply apply your logic. See, as I said, na, calculations are simple. This is your material consumption for a month because we are preparing this budget for a month. It means this 1,12,000 is for 28 days and I want to keep stock of 2 days. So it is divided by 28 multiplied by 2. Similarly, this 70,000 divided by 28 multiplied by 2. This will give me my closing stock, correct? So let me calculate how much am I getting. So it is 1,12,000 divided by 28,000. No, it's divided by 28 and multiplied by 2. So I'm getting, students, 8,000 here as my desired closing stock. So this becomes 1,08,000 kgs, right? Then for the other one, I have 70,000 divided by 28 multiplied by 2. So here, students, I am having 5,000 as my desired closing stock. So this becomes 66,000, right? So this is my raw material purchase quantity, which is obviously in kgs. Now in the sum, I am not given the purchase price. No, I am given. So when I multiply this by my purchase price, I will get my purchase cost, right? So I've got the purchase quantities. Now I have to multiply it by the purchase prices. So for P, it is 3 rupees. For Q, it is 2 rupees. So into 3 per kg into rupees 2 per kg. So this is your purchase price. And now you get your raw material purchase cost, which is obviously in rupees. So it is rupees 3,24,000. This is 1 lakh. Correct? Perfect. Many of you have got the answers and your answers are correct. This shows that you have properly understood this whole concept, right? Understood? Clear? Can we proceed? Everybody has understood, students? Good. Very good. Let us proceed. Now, this again is a question. You are given estimated sales in units, that is sales budget. And this is month-wise, April 25, May 25, up to November 25. Now, what is given as a matter of policy, the company maintains the closing stock of finished goods and raw materials as under. How much is the finished goods stock? So language adjustment says it is 50% of the sales for next month. So whatever is next month sale, take 50% of it. For raw material, what is the rule? Estimated consumption for the next month. Fine. Again, raw material will need later because we have to prepare production budget for which will require finished goods. Now, this again will require for raw material consumption. What it says, every unit of production requires 2 kgs of raw material and the price is 5. Prepare production budget, raw material purchase budget. Now here they are asking you for a half yearly period ending on 30th September. So they are asking you budget of 6 months. So you have 6 columns. After particular 6 columns are April, May, June, July, August, correct? But I have one advice for you. For the production budget, prepare 7 columns. That is also prepare production for October. Why? That I'll let you know later. Correct? So now you'll prepare production budget first, particulars, and 7 columns. 7 columns are your 7 months. Fine, students. Chalo, take a screenshot of this and start solving. You may start posting the production quantities. Yes, there is a language adjustment. Very good, Nikunj. You are correct. Chalo, start solving. There is something interesting in this, students. I'm sure you'll identify once you solve. So I'm not giving you any answers upfront. Start solving. You'll get that particular point which is special in this question. You're right, Nikunj. Because of paucity of space, I'll be ignoring zeros. Huh? So 12, 13, 9, 8, 10. 12, 13, 9, 8, 10. And for last one, 50% of 12. So it will be 6. Right? Now, students, what is the catch in this question? What you had to think on while solving? You had to think on the opening. Now, interestingly, opening is simple. Whatever is closing of the previous month is opening of the current month. Correct? So, if you apply this simple logic, I get opening. But question is opening of first month, April. I got opening of other months. How? Closing of previous month is opening of current month. Simple. But then how do I get opening of April? Very good, Koshi. Pawan, you are correct, but why need to assume that? That is a fact. No need to assume. What is this, Gayatri? What is 12? Nikunj, half of which one? Give me figure. So yes, that is what is the rule of closing stock. But okay, but then what is... Okay, Gayatri, understood. Perfect. You're right. Very good, Nikunj. So students, you are getting the trick. What is the trick or what is the point? Now, on similar lines, what will be opening stock of April? It will be closing stock of March. Now, March we are not preparing, but simple logic. On the basis of 12, which is April sales, closing stock of March would be how much? Half of sales of April, which will be 6. And whatever is closing stock of March will be the opening stock of April. So it will be 6. How did I get this 6? 6 is 50% of April sales, because whatever is April sales, 50% of this is closing stock of March, and what is closing stock of March is opening stock of April, right? So 12.5, 11, 8.5, 9, 11, 13, 13, right? Now, raw material required for production. Now, what is the raw material requirement, students? We require 2 kgs. So every month's production into 2. So 12.5 into 2. 11 into 2. 8.5 into 2. 9 into 2. 11 into 2. 13 into 2. So how much do I get over here? It is 25, 22, 17, 18, 22, 26. This is my raw material requirement, that is consumption, plus closing stock minus opening stock. Again, what is the rule for opening closing? So for material, the rule is how much do you keep as your closing stock? It is consumption for the next month. So entire next month's consumption is your closing stock. So for May, the consumption is 22. So closing stock of April is 22. So entire consumption, entire amount, right? Now comes for September. This is where this will be helpful. So we computed October month's production multiplied by 2 kgs, that is 26, is October consumption. So that will become my closing stock here, right? And then how do I get opening stock? Previous month's closing is current month's opening. See, you need not make these arrows in your exams. This is, I'm doing it just for your understanding. And again, how first month, same rule. April's consumption decides closing stock of March. So closing stock of March is 25 and that becomes opening stock of April. Correct? So I get raw material purchase, which is in kgs. So it is 22, 17, 18, 22, 26. Now multiplying it by price, I will get raw material purchase cost. So what is the price? 5. So you multiplied by rupees 5, everything multiplied by 5. You get your raw material cost. So 5 into 22 is 110. 5 into 17, 85. 5 into 18, 90. 110. So this is my raw material purchase. Correct, students? Perfect. Great. So students, I hope you're understanding this. You're getting the point, right? Clear to everyone, students? Yes. Should we proceed? Good. The majority of you have got the answers. Make better opening stock of April, you'll get how closing stock of March is opening stock of April. Now, what would be closing stock of March? What is our policy? Next month's consumption. So in March, what will be your closing stock? It is equal to consumption of April. So whatever is April's consumption, entire consumption is closing of March, and that amount is the opening of April. Correct, Mehak? So this entire consumption of April is closing of March, and this closing of March is again opening of April. Same like for production budget. Great. Super. Now I have something interesting for you. See, I've purposefully selected all different category of questions so that you get a comprehensive idea of this topic. Now in this, you'll also learn the production cost budget, but that is later. First is preparing the budgets. Now here you have a single product because only one sales are given and you have two raw materials. So see, we are having different combinations, two products, one raw material, two products, two raw material, here one product, two raw material. So there could be different combinations, but this is all together a different sum. So you can take a screenshot. I'm taking my 10 minutes break, but you will solve this sum in the 10 minutes, right? And whoever gives me the correct answer gets a chocolate. This is one of our special sums. So I always keep a reward as a chocolate. Chalo, start solving. I'll take a 10 minutes break. Okay, Vibhor has given me something good. Wow, Khushi, perfect. Okay, Nikunj, good. So it means at least something you all could do. Now my question, what is the special point in this? What was the uh, differentiating point in this sum where this sum becomes difficult? Anything special in this sum which makes it tricky, difficult? Yes, Nikunj, right? Very good, Khushi. Gayatri, I did not get what you want to say. Production cost will come later. The problem is in the very start. While even making the production budget, there is a problem at the start. That is okay, Kambira. Two materials, single product. So what is big deal? The issue is in this question, they have not given you production quantity. Sorry, sales quantity. Because for preparing or finding out production, you need sales quantity, which is not given, right? Now, if it is not given, you cannot find out production quantity. Now, that is what is the special point of this particular question, that you are not given the quantity of sales, but something else is given. You are given the sales value. Sales quantity not given, sales value given. Now here you have to slightly apply a basic logic. What is that logic? That if sales value is given, how can you find out sales quantity from the sales value? So the answer is sales divided by selling price is sales quantity, right? Right? Now you have to find out the selling price. I'll just do it here for the sake of convenience. So I prepare cost sheet which is in per unit, right? So I start from here, unit cost data given. So I have raw material A, B, then labor. I have again two, machine shop and assembly, correct? This will give me my prime cost. Then for production overheads, again, I have the same two departments, machine shop and assembly. This will be my factory cost, and then selling administration. This is my production cost plus profit. This is my selling price, correct? So raw material 10 kg into 3, 30 already given. 5 kgs into 2, 10 already given. Now for labor, what is given? Rupees 20. How they have got this? 5 hours into 4. So 20. And 10, how this 10? 2 into 5, 10. So 40, 60, 70, correct? So 70 rupees is prime cost. Now for overheads. Machine shop overheads are charged at the rate of 12 per machine hour. Now we know the machine hours from here. There are 5 machine hours. So 5 into 12, which is the ORR, I get 60. For assembly, what is the ORR? It is rupees 10 per labor hour. And how many labor hours are there? 2, correct? So 2 into 10. So it is 20. So I get my factory cost as 150. correct? Factory cost, or you can also call it as production cost. Sorry, I've just named it correctly. This is total cost. So this is your production cost or factory cost. Now, how much is your selling and administration overheads? It is 20%. So 150 into 20% is 30. So this is 180, right? This is 180. Now, how much is profit? Profit is 10% of selling price, means it is 1/10 of sales. If something is 1/10 of sales, I'm sure you know it is 1/9 of cost. So I have to take 1/9 of cost. So it is 20. Correct? So it will be 200. So I decide or determine the selling price by preparing the per unit cost sheet. It comes to rupees 200. Now, applying this formula, how much is the sales given? Now see, you are given third quarter actuals and last quarter budget. And we need to prepare it for the last quarter only because third quarter is already done. You are preparing it for the last quarter. So how much sales is given? Rupees 6,60,000 is the sales upon rupees 200, which is the selling price. So my sales quantity is 300 units. 3,300 units is the sales quantity, right? Now, once this is done, you can prepare your production budget, right, students? Good. Question 3. Production budget for last quarter, right? Particulars, and you can write as last quarter. So you have sales quantity plus desired closing minus opening. How much is the sales quantity we got? 3,300. What are the other figures? Closing stock of finished goods is 1,000. Opening stock is 700, right? Yes. Closing stock 1,000. 700 is opening. So my production quantity is 3,600 units. Right, students? Now I prepare my material consumption and purchase budget. All right. Now, how many material types I have? I have two material types, A and B. So material A, material B. Now what will be my raw material required? So my raw material required is 10 kgs of A, 5 kgs of B, correct? So 10 and 5 multiplied by what? My production quantity. My production quantity is 3,300. So what is my raw material requirement? It is 33,000 of A and 16,500 of B. Is it correct, students? 33,000 and 16,500. The students are saying 3,600. Sorry, you're right. This is 3,600. Sorry. My production is 3,600. So it is 36,000 and it is 18,000. Correct? Now, this is required plus desired closing minus opening. How much is my closing of A? 25. Opening is 23,500. 25 and 23,500. Similarly, for B, my closing is 15, opening is 13,400. 15, 13,400. Now I will get my raw material purchase. Right, students? So it is 37,500. Right? And it is 19,600. Correct, students? Is this right? Is this clear? Understood by all? I'll multiply it by the purchase price. Now, what is my purchase price? It is 3 and 2. So multiplied by purchase price, it is 3, 2. So I get my purchase cost. Rupees. 7 threes are 20,590. Those are 38, 39. Correct? Is this clear? Students, understood by all? Now we come to a new budget, which is production cost budget. Now see, students, if I have to give you a simple answer, this is your production cost. Sorry, this is prime. I'm sorry. This is your production cost. Simple. In cost sheet also, after adding factory overheads, the amount that we get is factory cost, or it is also your production cost. Now, this same thing, you have to do it for the entire quantity. When you do it for the entire quantity, it will become your total production cost, and that becomes your production cost budget, right? Now we are doing it for production quantity 3,600 units. Now this is nothing but your cost sheet. So raw material, AB, labor, I think machine shop and assembly, right? Overheads, again machine shop and assembly. Now 3,600, which is the production quantity, multiplied by the per unit cost of each of these items or each of these elements. How much is the per unit? 30, 10, 20, 10. 30, 10, 20, 10. And how much? 60, 20. 60, 20. So this becomes my total production cost. Simple. Right, students? So this is 1,08,000. This is 36,000. 72,000. 36,000. 1. Right? Now total of this. Yes, Nikunj, but you'll have to show it element wise. But mathematically you are correct. Yes, that is correct. You can very well cross verify by this. You're right. Chalo, students, everybody understanding this? Is this clear to all? Good. Good. Very good. See, I have some very special sums for you all. So if you are solving one, I will give you more interesting sum next. So the next very interesting sum is fourth. But now I want you all to take a screenshot of this. You will be doing this as a homework. So students, take a screenshot. 1 second, whether this is the complete sum on your screen. 1 second. Yes, wait. Take a screenshot. Okay. Now we'll go to the next important budget, though this is majorly asked in FM subject, but you may get it in your CMA paper as well. Now, what is this cash budget? Students, pay attention. Now, for cash budgets, even though the name is cash, just keep one thing in mind. It is your cash plus bank account put vertically. Now, what I mean by vertically, see, normally we have accounts ledger format, which is debit side, credit side. We call it as the horizontal format or the T format, where you have debit side, credit side, right? But cash budget is the same thing. So back of the mind, you should know it is nothing but your cash and bank account only, ledger account only, but put it in vertical format. So debit credit, it will be now like this. So what was debit and what was credit will now come like this. So it will become your budget. Just keep this in mind. Now, what is there on the debit side? You have openings balance of your cash and bank, and you have all the receipts in cash and bank. Correct? What is on the credit side? You have all the payments from cash and bank, and you have the closing balance. Now, if you just put it like this, so what will be the format of cash budget? Firstly, it is the cash and bank account combined. Even though the name is cash budget, it is cash and bank combined. And what all things will come? Opening balance of cash bank plus all receipts in cash and bank. This is the first part. Then the second part is all payments that you will subtract from this total, all payments, and the balance is closing. So see, simple. This is your format of cash budget. I hope you understood this. Yes, students. Now, if this is clear, then let us go to the question. Now, what does the question looks like? As I said, when you will deal with the same topic in FM, you will have lot many adjustments, because in FM, you will have more adjustments from the financial perspective, like raising of money through debenture, issue of shares, or purchase of fixed assets or sale of fixed assets, then interest dividend received, interest dividend paid. So many things you will have, which are generally not there part of cash budget when you're dealing with a cash budget in this chapter. So here we are mainly having the operational cash budget items. Operational means you'll have mainly sales, material, wages, all these income and expenses details more here. Correct? Now see, a newly started company wishes to prepare cash budget from January. Now you have to prepare cash budget for 6 months. So it is from January to June. Cash balance. So the starting balance is given as 10,000. And then every month's sales, material, wages, production, selling is given, right? Now, what are the important pointers? A new machine is installed for 30,000. Now, this was purchased on credit, and it has to be paid in 2 equal installments. Now, you have to remember that we are preparing cash bank budget, so we are more concerned with the actual payment. What are the 2 months in which payments will be done? Half in March, half in April. Next expense is sales commission. You are giving commission at the rate of 5% on sales. Fine. But in which month you give this commission, it is important. It is to be paid within the month following actual sales. So if the sales is of Jan, you pay commission in February. If sales is of Feb, you pay commission in March, and so on. So the payment is in the next month. This you need to keep in mind and understand. Very good, Nikunj. Then comes the next point. Rupees 10,000 is the amount of second call on shares. So here also one adjustment of share call money is given, and it is received in March. Similarly, share premium is also received amounting to 10,000. It is received with the second call. So it is also received in March. Now comes an interesting point. Now all these sales, purchase, wages, then may not be paid in the same month. Why? Because there could be some credit. Now credit allowed by suppliers is 2 months. Credit allowed to customers is 1 month. So for sales, you are giving 1 month credit. For purchases, you are getting 2 months credit. Then delay in payment of overheads is 1 month. So overheads is paid 1 month later, and wages has a delay of half months. This is again interesting. So some language points are there. You need to just implement it properly, right? Understood? Now with all these adjustments, let us prepare the cash budget. Cash budget for first 6 months, right? So it is particulars January, February, March, April, May, and June. As I said, it is nothing but your vertical cash and bank account. So you have opening balance of cash bank. In that you have receipts. Now receipts is from debtors, that is for sales. Then here you have share call money plus premium. I think we have only 2 receipts. Then you have payments. For payments, you have payment to creditors, which is for purchases. Then you have payment for overheads, payment for wages, which is half. So half current, half previous. Correct? Then you had payment for machinery purchase. And then you have closing balance. Right? Now see, one important tip. This will ensure that your solving is faster and also error-free. What is that important tip? Don't solve it month-wise. That is, while writing the figures, don't write all figures of Jan and Feb. That we'll do at the time of totaling. First, we'll write all figures of sales. Then we'll write all figures of this. Then we'll write all figures of this, because the data is given in that fashion. So write it in that fashion. That will be much more effective and helping you to get the answers faster and error-free. Correct? Now, yes, one expense was sales commission. Right. Now, this is your sales. What is given? You have 1 month credit for your customers. So you allow credit of 1 month, which means what? January sales will come in February. So the payment for January will come in February. So it is just 1 month differing, you will write. So 20, 22, 24, 26, 28, 30. So 20, sorry. This is my first month of business also. So I don't have data, so there is no realization here. Now January is realized here, February is realized here, March here, April here, and May here. Correct? See, again, for the requirement of space, I'm writing figures in thousands. Right? Okay. Then what is next? Purchases. Now, I am getting 2 months credit for my purchases. That is, my suppliers are allowing me 2 months credit. So 20, 14, 14, 12. Now 2 months gap. Correct? This is of Jan, Feb, March, April. Correct? 20, 14, 12, 12. Right? Now for overheads. Again, overheads is 1 month delay. Now overheads, I'll just add up. There are 2 overheads, so you can simply add up. This is 4. This is 4.2. This is 4.1, 4.3, 4.4. So it is 1 month delay, right? 4, 4.2, 4.1, 4.3, 4.4. Which was it? 4.213. Now, for wages, what is the delay? Delay in payment is half, which means what? First half month wages, 1 to 15, you will pay after that in the second half. Means what? The wages of first 15 days you will pay in the next 15 days. That is how you'll get half month credit. And the wages of the next 15 days you'll pay in the next month. In other words, every month's wages, half is paid in the same month and half is paid in the next month. So if I take January wages, 4,000, how it will be paid? January wages, half will be paid in the same month, half in the next month. And now since this is the first month, there is no previous month's payment here. Similarly, February month's wages, half is paid in the same month, half in the next month. Similarly, March, half in the same, half in the next. After that, April, same, half, half. Then May, half, half. And then June, half. Balance half is in July, which is our next month. Right? Clear? Is this understood, students? Clear to all? Let us proceed. Now, what are the other things? Machinery, 30,000, which is on credit, and half is March, half is April. So, machinery, half in March, half in April. Right? What else am I having? Second call on shares, which is entirely received in March. Amount is 10,000 and it is also having premium of 2,000. Correct. So March 12,000. Correct. Yes. And then last point is the sales commission. 5% of sales, which is paid in the next month. So January month's commission will be paid in Feb. Feb month's commission paid in March. And how much it is? 5% of the sales. Correct. So 20,000 into 5, which will be 1,000. 22 into 5, 1,100. 24 into 5, 1,200, and so on. So sales commission January paid here. February paid here. Correct? March, sorry. February is 1.1, 1.2, 1.3, 1.4. Right, students? Is this clear? No. After putting all the data, now you start doing the totalings. This definitely you will do month-wise. correct? Now 4, 6, 8, 9, 10. Okay. 45, 8, 43, 44, 44. Is it correct, students? Kindly cross check. Chalo, give me the balances, students. Chalo. Give me the balances of each month. So keep in mind, what is the trick? The trick to save time in the exams plus to avoid mistakes is first putting down the figures. So for sales, I'll put down figures in all months. Then for purchase, then for expenses, wages, overheads, and then any other special expense like machine purchase and all, whatever it is. Right? Then I will do month-wise. This is the key point. Understood, students? Chalo, give me the balances, the cash budget balance of each month. Yes, Gayatri, balance can be negative. Now you'll ask, sir, how can the balance be negative? So we are having cash and bank combined, right? And bank can have OD. So that is how you can get a negative balance too. Chalo, give me the balances of every month. Better give me final closing balances, Pooja. Possible, 300. Okay, whatever, give me the balances. We'll cross confirm na, with others. So you may get negative. That is possible. 6.95. Correct. And I think this is 300. Students, kindly check the balances. This is what I am getting. Pooja, I don't think what you have written is correct. See, but it is simple calculation. I don't think there can be any scope of there being a different answer. It is so simple, add and less. I don't know why you are getting different answers, students. I think this is the only answer you should get because it is simple maths. Okay, Nikunj is saying my wages for May and June are not correct. May and June. Okay. Okay. ठीक है. I'll just recheck. Wages. May is 4,800. This is 4,600. Understood. So I had actually written the full figure. Okay, so Nikunj has given me the reason why some students are getting a different amount. Okay, I correct. Now then, what are the balances, students? So now what are the balances, students? Okay, Nikunj, you say you've taken correct. So, okay, the answers which I have written, Nikunj, earlier, which were your answers are correct, right? Students, now this should be the only answer. In fact, it was the only answer. Student, please confirm it is simple maths. You cannot have different answers. Or if you want, I'll solve it. I'll use calculator and do it. But I think that was simple. It should have been done at your end. You want me to do it? So I think up to March, everybody is having same answer. 32 minus 40 minus 4.1 minus 15 is 1.2. So this is 6.9. Now I start with 6.9 negative 7, 6, 7. 14, 6, 3.6. This is 5.2 students. Well, okay, this is 0.2, right? This last one is 0.2. I also got 0.2. Right, students? So this is final. Right? Clear? Good. Students, I hope you all have understood the functional and the master's budget. In the next class, we will be dealing with the flexible budgets. In the meantime, I request you all to solve more sums from module and maybe from all other material that are hosted on our institute's website. Right? So kindly do that. For your better practice, you can use past exams, MTP, RTP. Excluding the flexible budgets, you can solve everything else in budget. Okay? Fine. Okay, students. So thank you. Thank you very much. Good night. Fine, students. Great. Thank you very much. Yes, Ashokji, session over. Thank you, Ashokji.